Gubadam. Alright. Welcome everyone. I think I've streamed in nearly a week, so it's been a minute. Alrighty. So there's two ways I'm looking at this right now. Obviously, I'm going to show you what the bearish scenario is and then the bullish scenario as usual. So the concerning thing is that, at least on the daily, we've been making higher lows and higher highs, right? But the question is, why are those higher highs more significant? And then the other competing idea that I'm looking at here is the equal highs that we have set up. There's so many fucking equal highs. So I believe I talked about this last week, but as it stands right now, this structure is a bit hard to read. So one way you could read it is that, if somebody has long this in the last month or so, their invalidations could be at either one of these lows, right? So if we go below this, they might get stopped out and validated. Below this, same thing, and then below this as well, right? But if we look at the top side, there's really only one or two spots, and it's much more clustered together. So if we get another equal high here, it's likely gonna, if it can hold, and it likely will at 90,800, then we should be able to pop the top. So there's two opportunities to short. One of them is more, there's more than two, but at least what we're gonna get in the next, sooner than later. There's a cheeky opportunity here, which I'll show you in the low time frame to look for, but it's really low probability, really high risk reward. So, and then the other thing is what happens if we pop the top. So if we do pop the top, this is where we're going to see whether or not there's an imbalance of supply and demand. Right here is going to be the big spot. And you can see on the heat map as well, of course, the heat map does have, it's a little bit flawed, right? With, in terms of it being a rough estimate. Let me zoom out a bit so you guys can see it better. So we've got pools of liquidity here at this one, which I talked about right here. And then we've got another one setting up here. And like I said, you can always just see this on the price. If price is making relative equal highs, it's pretty fucking likely that there's a lot of short invalidations in the same spot. As far as the longs are concerned, there's really only one spot in this range other than down here, of course, but this is way deep sea diving at around 73,000. There's one at this low here at around 83, so down here, which means that this local one, there's not too many invalidations. So, they've done some really cheeky stuff on this chart. Sort of like, I think somebody said it in Discord, and I agree. It's kind of like the market maker's playground right now, where we're seeing the fucking Bart Simpson pattern, right? Here's Bart Simpson, here's Bart Simpson, and the same thing on the inverse as well. But the fact that we've seen this sort of cheeky stuff happen here, like obviously when we were dumping, we found a low, and then we just had a cheeky wick sweep all that out and then pump it. It means that there's not that many invalidations locally. So that most of the invalidations are to the top side. So what does this show us? It shows us that in terms of the derivative market, shorts are sweating a bit more than longs here. So most of the local invalidations when it comes to leverage is on the short side in terms of what we're closer to. So what we can derive from that information is that the derivative market wants to squeeze higher. If we can't do that, that shows the spot market is still in immense control. So the spot, basically, if the leverage market is showing that we want to squeeze higher and it can't do that, even with the leverage market wanting to go higher, that's a pretty bad sign when it comes to supply and demand. So what we're trying to do is we're trying to figure out what the supply and demand looks like. And when you're bouncing in between a range like we've been doing, it's hard to determine what that supply and demand actually is, right? Because we haven't really made any new highs, any new lows. So we can't, there's two ways we can derive what the supply and demand is looking like. The first way is a little bit trickier, and that's going to be what I just went through in terms of the derivative market wants to go higher, but if there isn't enough demand on the spot market, then we're never going to see that popping the top. So if that's the case, then supply is really in control here, because Normally, you know, we want to wipe out the leverage before. So, but if, you know, it's a little bit more leveled in terms of supply and demand, then we should be able to pop the top. And then this, if this happens, this is where we get sort of that true understanding of what supply and demand is, because one of two things is going to happen. We're either going to fail back in the range. If that's the case, then we're likely going to be making new lows, and I'll show you where we could go to next if that's the case. But if it can hold, and we've got some room to run, and it shows that demand is back pretty much, at least for the time being, until we go higher into deeper supply pools. So if we do go low without cracking the highs, that shows that supply is, you know, still heavily in control, because we're not even able to squeeze out the derivative market. If we do go high first, then we get a really clean example of what the supply and demand is looking like, right? And all you want to do is, if you go high, you just want to hold above it, right? You don't necessarily want to spend a ton of time here, but as long as you're holding above it, that's a really good sign. I'm sure that we'll get some turbulence around 100K no matter what, just because it's a psychological level. So outside of like the price and stuff, obviously a lot of people are looking at 100K just from, you know, it's a nice round number that a lot of people will look at, a lot of market participants will look at. But if it is able to be maintained, then we've got some room to go up before we hit deeper supply pools. But if we go low, the next area to look for, and I posted this on the YouTube, is we'll probably get some sort of equal lows that start to form around 76. It could happen at 78 too, but regardless, you don't really want to form equal lows down here. So if we see this failure up here where it shows us that supply is outweighing demand, then we go here next. And this is not very good. As most of you guys know, it means that if they had longed Bitcoin at all this year, their invalidations have been taken out, or their invalidations are resting at these lows. And then these guys will be sharing the same invalidations as these guys. So two things we want to pay attention to. First thing, if you're bullish on Bitcoin, you got to, you know, hope that we at least pop the top, because that's going to give opportunity to show that demand is, there's a good chance that demand is back in control, or at least a shot at it, right? If it can't even manage to do that, you know, this thing is, basically, if we can't even manage to do this, I don't even know if we're going to hold it here, because I think that just confirms that the supply is heavily, like there's a few examples of this, right? Something that happened here. While we did technically sweep the highs, it wasn't very significant, so it's kind of hard to see. But if we look at like these previous highs, so this is back in October. So we did technically sweep it. It might be hard to see if you're on mobile, but we did technically sweep it. Just we didn't go as deep. We didn't really go deep at all, which means that, you know, we didn't really get all of the invalidations up here. Remember, stop losses and invalidations, just like anything in the chart, is usually going to be a zone. So when it comes to like entries and exits, whether the exit's a profit target or a stop loss, it's usually going to be a zone, not just like a precise line. So we got some of them, but we didn't get all of it. And that, you know, the result of showing the fact that we couldn't even pop the top here was, you know, supply really was in control, and we saw all that sort of carnage come in afterwards. So we have something similar setting up here, right? Invalidations in this area, you know, the longs were in multiple different spots where you had all the shorts in the same spot. And this is the same thing, although this one looks a little bit better because the distance between the lows is a bit more dramatic in this structure than the distance between the lows in this structure. So that already looks better. I think there's a good chance we can pop the top. Again, if we can't do that, then we might be, you know, heading into a bear market. And like I said in previous streams, I think it's more likely that Bitcoin hits an all-time high than Bitcoin hitting zero. So I'm not saying, you know, a bear market means like, oh, Bitcoin's done for. I don't think Bitcoin's done for. Eventually it'll make a comeback. But you know, how long that could take might be uncomfortable for some market participants, particularly if they're newer to Bitcoin. Like if you joined the Bitcoin train in the last couple of years, well, actually since like 2022, you haven't really seen a big drawdown. Like obviously in Bitcoin's history, we've had pretty sizable drawdowns in the past, right? The post-COVID bear market, and then the post-2017 sort of rally, and then obviously the COVID dump here. But this was pretty quick and largely due to the fear of COVID that came in. So, but it doesn't mean that Bitcoin's done for, right? Eventually, in all these scenarios, Bitcoin eventually made a comeback. But the question is how long that could take. And I think the battle for the narrative right now, as most of you guys know, is, are the 4-year cycles going to continue, or because of the ETFs and the introduction of institutional money into Bitcoin, are we done with the 4-year cycle? And so this structure that we've been forming pretty much since, November, middle of November, up until now, is one of the final tests to really see which one of those narratives is going to win. Nobody knows for sure. So obviously nobody knows. So, if somebody says, oh, it's the 4-year cycle, it's guaranteed to dump, they don't know for sure that's going to be the case. And then the opposite of that is somebody saying, oh, the 4-year cycle's done. There's no more bear markets in Bitcoin, which that sounds already kind of funny. But that also could end up being true as well, at least for the near future. So again, we want to be able to, if you're bullish, you want to be able to at least see it pop the top, because that shows that supply and demand, while supply still could be in control if we fail this afterwards, at least it's becoming a little bit more leveled out. Whereas like obviously in previous examples, like this one, we weren't even able to pop the top. And then if we look at this structure here, which is quite interesting, it's similar to what could play out here. So we're seeing sort of the same thing, just on a smaller scale, where you have all the equal highs. Again, here you had all the equal highs, here equal highs, and then you have sort of 3 sort of lows that aren't as close together as maybe the highs were. And then we saw it pop the top, but eventually fail lower. So that was a good first sign. We obviously weren't able to do it here. So I think it's possible that we see a test back higher. And one of the good news is about that is there's not really too much high time frame levels to be concerned about. There's a couple, but they're not as significant as we've seen it in the past. So that means that if we can hold above that, there's a good chance that Bitcoin could go for a little bit of a run here. The first red box would be here as we hit, in terms of like big supply pools. It's sitting at around 110 all the way up to 112, where we'd hit a bigger supply pool because of where previous liquidity had conviction. So where previous shorts got taken out in the past. And you can argue it was like distribution, if you want, whatever terminology you want to use. And then the next one would be here. These are sort of the 2 major supply pools that we'd have to get through if we can maintain above here. But the good news is the distance between, here and all the way up here is plenty of room to run. There's a couple other cheeky spots, like I said, but they're not as significant in terms of supply as from 110 to 112 and then from 115 to 118. So first step is we have to see if it's even possible for it to pop the top. If not, then it's going to get pretty bloody. And if it can, then, we're starting to see this balance sort of come back into play, where it's not just super supply heavy, and there is also that competing demand that's coming in. So yeah, I mean, there's other stuff on the local that you can look for, which is a bit cheekier. It's actually what we're looking at right now on the local is some cheeky opportunities, but of course, that when I say the term cheeky, I'm mainly referring to the probability of them working out is rather low. So what you could do if you wanted to short it is looking for sort of those equal highs to come to fruition again. So waiting for it to sort of make those equal highs, and then if it fails below this again, then there's an opportunity to short it. I wouldn't be aiming for like down here, right? Somewhere in the range here. So the risk reward's pretty good. Like if I was to map it out, it would look something like this. Somewhere in the range. And it's like, a little bit more generous on the entry, but it's like about 3 risk rewards. So it's not too bad, but obviously with a 3 risk reward short, with the potential of becoming much more than that, which I don't think it would in this case, but it could, the probability of working out is rather low. And there's another aggressive one that you can look for, which is obviously even more aggressive, but we haven't had a test of it on the local, at least on the hourly, which is here at 91.7. So similar thing here, but the probability, again, take it with a grain of salt, because the probability of something like this working out is pretty low, just because, it's a very tight stop loss. So it's kind of tricky to grab a short right now. I think if you want to be really high probability of your short working out, you got to wait for all of this to get taken out. Like I said, just popping the top and then seeing the imbalance of supply and demand up here, and then it looks like a better short. As far as longing it is concerned, I mean, the only play right now technically is to long it. It just doesn't look fantastic because you don't have a lot of high time frame confluence you're working with. If we look at the structure that's been printed in the last week or so, obviously we had that sweep of the low, but it ended up holding, right? If this was to be super bearish, then when we took this out, we should have seen it dip lower than what it did. If everybody's selling at the same time, it probably should have went lower, right? But it didn't. And then holding the structure where we're at right now is pretty important, but we are struggling with it. And I think that's also due to the fact that, the stock market is down today. Gold and silver are also down today. So obviously that's going to make it harder for Bitcoin to do well. And then the other thing in terms of like the bearish argument is, I mean, if we're not looking at this stuff over here to the left and we're just looking at what was printed in super late November, early December, then I mean, we've made pretty insignificant higher highs, and that's usually not a good sign. So, basically to put it simply, when we went for a high higher than this high, why wasn't it more significant? And then you can argue, well, it's because of all the stuff over here, which is a good argument. So to put it simply, if we can't pop the top, this thing's going to dump. I mean, I don't even know if we're going to hold the 70K ranges. If we can pop the top and it does fill, then I think we can hold the 70K ranges, but then it starts to introduce this idea of really high time frame equal lows, which is concerning. But I'll come back to Bitcoin here in a second. I'll leave it open on the lower time frame on the left here, so we can watch the action, and then let's talk about the stock market and stuff, because I think one of the reasons why we haven't seen a decent rally come out of Bitcoin today, even though Ethereum's rallying and a lot of the other ones are, is because obviously the stock market's down a bit today. It's not down significantly. It's starting to go down a bit more, but we got close to all-time highs again on the US stock market. It's a good sign. I told you guys it's likely what's going to happen, but it doesn't have to happen immediately, right? There's obviously an ebb and flow to this. It could, drip down a bit more before we see that. And then, of course, with the stock market slightly down today, we've seen the VIX kick up a bit. Not really much, right? But just a bit. And so if the VIX is going to kick up, we might see the stock market have a bit more red this week until we get above 18.5 on the VIX. But the sad part about that is sort of the timing of it, because Bitcoin's in sort of that critical spot where we're seeing what the supply and demand is really going to be looking like. And then, of course, with the stock market poised to potentially have a little bit more red this week, that's going to make it harder for at least the way that liquidity provision is sort of set up on Bitcoin. Obviously, you guys know the market sentiment between the stock market and Bitcoin is pretty close together, at least when volatility on the stock market comes into play. So I think the S&P still looks fine. But if it is to have a little bit more blood this week, not significant, but if it is to go down a bit more this week, then it's going to be a lot harder for Bitcoin to fight through the local structure, which is quite unfortunate. But who knows? I could be wrong about that. And honestly, with the VIX structure, the high time frame has broke. So there's a slight chance we might see red on the stock market this week. It's not a super high probability, but obviously with today's action, usually when you get a red Monday, it's not the greatest sign because you've had the whole weekend for the fear to sort of subside. And usually, if the fear has subsided by the time Monday comes around because the markets have been closed, usually you get a decent open green, but in fact, it wasn't the case. We opened red, which is a little bit concerning. So keeping an eye on that, of course, could have negative timing with Bitcoin, unfortunately. Look at the Nifty 50. I might look at that in a little bit. We have Fed meeting. So there's FOMC coming in this week as well. So gold is a bit unfortunate. It's following the plan, which I love to see. It's good to trade it, but if you're bullish long term on gold, obviously that's why I said it's unfortunate. So structure is starting to break a bit. If we go underneath, if we go underneath 42 again, is a good chance that it's going to break. And if it breaks, it doesn't mean that we have to go for this low, but the probability of that goes up. So it's lovely that gold's following the plan. It's been nice to trade, but it could mean that the hedges are going to do a lot better here. So we'll take it one step at a time. This is a good spot to look for as well. If we break underneath 42 again, which is 41.50, we can try and rebuild the structure, but the overall bigger structure on gold that's been formed since the dump that came in October is starting to be put to the test now. It's because this is the same thing I use for pretty much anything with a decent amount of leverage. You held where you needed to, and now you're starting to retest the areas that you needed to hold, and usually that's not a good sign, but it's working out nice so far. It's just, it's bad timing for Bitcoin and the alpha markets, because, if some of the bigger market cap alpha markets are sort of getting beaten up, then it's just, liquidity provision is going to be a little bit more hesitant to provide bids on Bitcoin. Silver's fine though. We didn't even need to take out the low, so that's good and bad. Ideally, if we take out the low here, we wipe out all that long leverage that jumped into silver after the new all-time high. But the bad news would have been potentially running the risk of this arrow happening, and then because we never even did it, that means that we're stacking even more long leverage on silver. So if gold structure starts to break and we start to see a little bit more fragile structure on silver, then the test low here is going to be, even more spooky, because we're not going to have as much demand from market makers. So silver still looks good, certainly better than a lot of things right now, but of course, if there's enough downward volatility that hits bigger market caps like gold and the S&P, then silver is going to feel that sting of that market sentiment, regardless of what it looks like on its own. Okay. Now, silver does decouple quite often, at least relative to a lot of other things. But, obviously, if the volatility is high enough on the bigger market caps, then everybody feels it everywhere. The dollar, you guys know the plan for the dollar. It hasn't changed. In fact, holding this at the low is pretty impressive so far. So once we get above 102, then I can change my opinion potentially on the dollar. But as it stands right now, it looks quite strong. It has taken a long time though, which is a bit concerning because it shows that maybe there isn't that much strength. So we'll have to see what happens above 102, but that's still the plan. It hasn't changed much. And then same thing with oil. The thing about oil is it could dump at any moment, or if we get a small pump, then it's the same logic, right? We can look for add-ons to any shorts that you may have grabbed that you still have open, but bottom side structure on oil does not look good. So it might not happen tomorrow, but it just continues to look worse and worse on the bottom side of oil, and unfortunately for the people that are bullish on oil. And then this is also still pretty concerning. We've seen, I believe I mentioned this on the YouTube video, but we've seen obviously the Japanese bond market the yield has been going up rather quickly. A lot of people have noted this as there's differing opinions on it, but a lot of people have talked about this. I didn't think we'd have this series of ramifications coming from the Japanese bond market onto the US bond market. Just because the size difference in the economies, obviously the US economy is much, much, much larger than the Japanese, but it is interesting to see, yield spiking a bit here, and then especially with QE around the corner. So we'll see. Likely the Fed start to buy more bonds and hopefully knock the yield lower, but we could see a pop in the yield for the next couple of weeks, and we'll see what kind of how that plays into the rest of the market. But basically, people are selling U.S. bonds, and it could be because of how people are viewing the macroeconomic climate, or it could be sort of less trust in the U.S. But we'll see how that rotation plays out. Obviously, with the VIX spiking and the S&P potentially having a more red week. I don't think significant. Again, it would just be like a smaller pullback. We've seen the Mag 7 sort of take a hit a bit, but Tesla is playing off nicely. The long worked out, and now the hedge, if you wanted to take it, it worked out quite nicely. So the next area to look for if we do see a red week is Tesla needs to hold around 412. If it doesn't, then we start to test the structures out, and then that could get kind of bloody. So it's worked out nicely. The Tesla plan continues to work out nicely, but it could, if we don't hold around 412, then it could put the higher time frame structure into jeopardy a bit. Not much to say for the rest of the Mag 7. Obviously, Apple and Google are still chugging along quite nice, and the Google structure doesn't look too bad. There's not much I can derive from it right now in terms of saying, oh, we've hit the top on Google or Apple or even Amazon, even though the Amazon fluidity on the top side was rather strong. It should be fine if the S&P eventually recovers and we don't see too big of a pullback on the S&P, but Amazon is looking a little bit concerning. I won't lie to you here. NVIDIA is also playing out, so next spot for NVIDIA is around 191. We'll have to see. This is going to be a big test area, so this will likely determine one of these two arrows to play out as this decision pointed around 191 on NVIDIA. And then Microsoft looks fine. Microsoft looks pretty good. So that's an update on I can look at Meta too. It's worked out nicely, and then this is the plan. So not much has changed on Meta, which is why I wasn't really planning on looking at it, but that's sort of the update for the Mag 7. Excuse me. All right, so Ethereum. Don't forget about the Nifty 50. Oil has no volume yet. Natural gas was dancing. The Nifty 50 should, like most foreign indices, it should follow the U.S. index for the most part. There's going to be discrepancies, but the main thing you want to look for, if you think that whatever foreign index that you're looking at, if the S&P is geared to look good and go higher, then likely that'll follow the same market sentiment. Probably not as close. Probably not as many gains out of those markets, but the overall sentiment should look fairly similar. All right, so looking at Ethereum here, it actually does look a little bit better than Bitcoin, and I've been saying that for a little while now. We saw some good fluidity off the test of 2920. So obviously we never got the perfect test off of it, which isn't a good sign. It did get pretty messy down here, and of course with Bitcoin dumping significantly, that's what's to be expected. And it still could be the case, right? Just because Ethereum's looking a little bit better than Bitcoin, structurally speaking, at least locally in the last little under a month, it still, can dump if Bitcoin dumps significantly. So remember, they can decouple a little bit, but if the volatility comes in really hard on any of the bigger market caps, it's likely going to affect the smaller market caps. And a simple way you can think about that is smaller market caps in general are going to be more categorized in the alpha risk, meaning it's obviously a little bit more risky the smaller the whatever financial instrument you're looking at, right? The smaller the market cap is usually going to lead to a little bit more of a higher risk investment. And so if the bigger market caps, which are usually seen as lower risk, if those are going down, then it's likely that the higher risk stuff is going to go down as well, if it's significant. If it's like today, like Bitcoin's down today, but Ethereum's up, but Bitcoin's not down that much, right? It's only down like 0.3, 0.4%. That opens the door for, we could see sort of, smaller market caps actually not do too poorly. It's when Bitcoin's down like 3 or 4% that Ethereum's going to go for a nosedive as well. But, decent fluidity, and then obviously the local as well. A little bit of a front run, but the higher time frame worked out. So it's in the same boat. This sort of local structure of making insignificant higher highs and higher lows is concerning. But then when we add all the context of looking over here to the left, we can see that there's a lot of invalidations that haven't been taken out yet on Ethereum. So if we're including more data, it actually does look bullish. Same with Bitcoin, at least for the short term. But if we're narrowing in on the data a bit more, and we're just looking at how much action has happened in the last couple of weeks, then I would argue it's bearish. So it's always important to use more data, but there's multiple trends happening at any given time, and sometimes, very rarely, the lower time frame trends can take precedence, but normally that's not the case. So to put it simply, if we're looking at a little bit more data, then it does look bullish, at least for popping the top. And then similar to Bitcoin, with all the invalidations at the top, then and the invalidations for the longs are a little bit more spread out, then we can see it pop the top. And you know, I don't think it's. I think it's pretty good probability that that happens, and it's the same thing. Like if we look at pretty much the trend that came down here that started sort of this big sell-off, we saw a couple structures forming, right? We saw this structure forming, we saw this structure forming, and now we're seeing this one, right? The stuff in the middle is just downward moves. But what we can derive off of each structure is, you know, the supply was so overwhelmingly strong in the first structure here that we weren't able to pop the top before going lower, which shows that obviously supply was in major control. And then in this structure here, we were able to pop the top before going lower, which is a good sign. So it's showing that supply and demand are starting to get a little bit more aligned. And so it wouldn't be surprising at all if we can pop the top again. And now the question is, if we do pop the top like we did here, is this going to be the one where we actually hold it? And if we do hold it, that shows a pretty good sign that we can go, you know, we have a lot of room to run higher before we run into deeper supply pools, just like on Bitcoin. Sol is the one to short on every pop. It just works. Yeah, Solana, I mean, structure doesn't look too good, unfortunately, but I'll talk about Solana a little bit later. And then when do we run into the bigger supply pools? I mean, there's one right here that's pretty big. It's just under 4K, so you can call it 4K because of the front run of liquidity here. I believe I talked about this in the past, but I'm not sure. But because we didn't get a proper test, we should be able to you know, go above 4K before we see any deeper supply pools start to hit the market. And this is a big if we're able to hold it here. If we don't hold it here, then there's a good chance we're going to go for a low lower than that low. And I've said this in the past, Ethereum has more breathing room on its structure than Bitcoin currently, but it's not like a ton of breathing room. And then of course it's, I mean, you want to see strong fluidity regardless. There's room to, you know, bounce off of here and it'll still survive on the structure. It just looks like it'll consolidate a lot. It'll take a lot longer before we get above here if that's the case. Whereas if we can start to do it here, then it's going to happen a lot sooner than later. And I don't just mean because, you know, we went lower, so obviously it's going to take longer to go higher. I'm not saying that just because of that, but we could see a lot more like structure develop and, you know, things happen before it eventually goes up. Whereas this one, you know, we could start to launch it back up, depending if we see that shift in supply and demand on the price structure sooner than later. And obviously the fluidity as well is better because, you know, you didn't have to test lower and sort of run the risk of running out of breathing room here before the structure breaks. And so obviously going up sooner than later is better, but obviously it's also due to how that fluidity looks and how the supply and demand looks will lead to more confidence sooner than later. And then, of course, like topside stuff, there's the 4K level, and then, you know, there's some stuff up here, but that's pretty much it. Like the 4K up to like 41, I guess. So like up to here. And then after that, I mean, this big supply pool, if we can get through it, right, then we've got equal highs all the way up. Even this one is shared with the one way back from 2021. So first step is on Bitcoin and Ethereum is to see what happens if we pop the top. And if we don't pop the top, if we can't even manage to do that, that's going to look really, really bad. It should lead to a lot of carnage on the markets, at least in the crypto markets. But I'm fairly confident that, you know, demand at this point is strong enough to do so. When we look at the icebergs, there's not too much on the top side, and the bottom side's starting to fill out a bit more. So that's a good sign. We're starting to see a little bit more demand on the bid side of the book come in versus obviously the top side. Liquidity has been kind of wishy-washy though. Like even right now, the liquidity is super thin. And it's been a little bit thinner lately. Not very alarming. Like if we see the kind of thin liquidity we're seeing right now, but that continues to persist for an extended period of time, like let's say the rest of the week, we start to see this thin of liquidity, that starts to become concerning. But overall, that hasn't really been the theme. It's been pretty decent, which is a good sign. Zcash short soon or Gigapump? Yeah, so Zcash is pretty interesting, right? I mean, it's just been it's been decoupled from the market pretty hard. So the first step for Zcash is it needs to get back above these previous lows here, and it's trying to do that right now, but it's currently failing it. So it's a critical spot because it shows it shows one of two things, right? Either it's going to be bearish fluidity is so fucking strong that that even something like a support resistance works out. And usually that, I've said this in the past, this is a pretty rare thing to work out. That's why I don't use it as a strategy. But if I do see it, then that helps me sort of understand where it's going to go from a directional bias. But you know, this recovery on Zcash has already been pretty abnormal, and usually when something abnormal happens in the chart, it's worth noting, because what we saw in Zcash, which I'm sure some of you guys grabbed this, was we had equal highs forming, right? It popped the top and failed it, but we actually saw this bounce back happen, which, you know, I wouldn't have assumed was going to happen. I would think that we would go for the low first, so that's pretty impressive so far. But now the question is, can we get back above these previous lows? And if we can, then, you know, there's an argument to be made that Zcash can make a recovery, right? So if we can get it back above them and see some daily closes above, then looking for the retest there, and then we can actually go for it. But it's going to be a battle right now, particularly with, so if we take it from the top down, right? If we're expecting the S&P to potentially have a little bit more of a rough week, not anything significant, like I said, but if we're expecting the S&P to potentially have a little bit of a downward move, that means that obviously it's likely that Bitcoin will do the same. And then the question is, you know, will Zcash also follow that bigger market sentiment? There's some argument to say that it won't, because it hasn't. Like, the reason why everyone's asking about Zcash lately and why it's been so popular to look at is because it has sort of decoupled from the market sentiment in a lot of different scenarios, right? When Bitcoin was going down, Zcash was going up. When Bitcoin has been going up, Zcash has been going down. And so we're seeing that decoupling happen, which is pretty important if it's going to make this recovery. But, you know, we still have equal lows, which is concerning. And then, so these next couple days for Zcash will be pretty important to see whether or not we can get back above 420. And then, you know, how significantly can we get above it? How many higher time frame closes can we hold above it? And then if it checks all those boxes, and it looks a lot better, but I'm still, you know, a little concerned based off the fact that the bigger market caps, if they get volatile enough, then it'll have ramifications likely on Zcash. That's just normal standard issue stuff, like I spoke about earlier on the stream. When bigger market caps are getting a hit of volatility, smaller market caps will likely follow. But I do want to make note that it's important to understand that Zcash actually has been decoupling from the market sentiment quite often, at least compared to other altcoins that are out there. But yeah, I mean, it's an interesting one, because you've got, you know, anytime you get pumps like this on an altcoin, you have to ask yourself, like, okay, is this going to be a pump and dump? And a lot of the times it is, right? Particularly when Bitcoin's not looking as strong. But one of the things that you can also look for is the volume has been going up, which is pretty impressive. Normally, we don't always see that. Normally, if an altcoin goes on a run by itself, usually the volume starts to taper off the higher we go, but that wasn't really the case, which is a good sign. It doesn't mean that it's enough, right? But it's usually a good sign. In fact, the resilience from Zcash so far has been quite impressive, because I would have expected, like I said, to go for a new low here instead of what we saw. What's up, Xeon? Good morning. SARS, welcome. Monthly looks fun. Yeah, most of the time, I don't really derive too much from the monthlies, maybe like the open or the close. But yeah, I mean, it's a pretty nasty monthly candle that came prior, but this one so far has been trying to mount a comeback. So let's see if it can close green. If it can, then it'll be above 420 again, and then needs to hold above green. But you know, mainly I'm going to be looking at sort of the more local structures, and local's relative, right? Like, everything's local compared to the monthly, but like the 4-hour and the daily structures to see where I think it's likely going to go. But if Bitcoin does pop the top, then there's a good argument to be made that Zcash will be floating above 420 again, and then can potentially make a bigger comeback down the road. But yeah, ETH against Bitcoin, I didn't show you guys this. It's still holding really nicely. It got a little messy, right? But the fact that it didn't break down is quite surprising. So yeah, I mean, even today you can see that, again, that Bitcoin's down a bit, but Ethereum's actually up. So the difference between Ethereum and Bitcoin right now is like 2%, which is not super abnormal. We have been seeing that the past couple months. But as far as like the past couple years, it's pretty not normal, right? If you look like last year, for example, Bitcoin being down like 0.5% today, Ethereum most of the time would be down like 2% today. So we're starting to see that change a bit. And I noted about this the past couple months that we keep seeing that. It's, again, I don't want to call alt season because it's not only is it cringy, but alts have just been getting slaughtered left and right. But you know, as we continue to see this, it's no rush, right? We just want to continue to see ETH start to outperform Bitcoin, and then Bitcoin not be in a fragile spot. And if we can see those two things together, then it opens the door for some more money to flow into the more riskier things, which of course would be the altcoins. Thoughts on Netflix buying Warner? Yeah, I mean, Netflix sort of hit the buy the rumor, sell the news type of pump and dump, which happens quite frequently in the stock market. As it stands right now for Netflix, I don't really have a hard bias. I would say that it's going to need the help of the S&P 500 to be. You know, it needs the help of market sentiment to be really bullish in order to start to form a bottom here. It could form a bottom outside of that, but I don't know because there's not enough data that's come in. So I can't say that, oh, we've hit the bottom on Netflix based off of anything technically in the chart. And usually if that's the case, then I would say that this Fin instrument is reliant on bullish market sentiment from the rest of the Mag 7 and just the S&P in general. I will note that it has some fragile structure at the lows. So maybe we find something here, but I'm going to be a little bit critical on Netflix because of the topside fluidity was good. So topside fluidity here was good. You had fragile structure that fell out. You tried to regain it, but because you couldn't, and this is multiple examples of sort of that support resistance, which again, I don't think is a good strategy, but anytime I see that in the chart, it's usually showing that supply is in control. Bears are in control, however you want to put it. But so Netflix is sort of a hands-off thing right now. I guess if you wanted to look to short it and join sort of the sell-off that's happened, 106 looks okay if it can mount some sort of comeback here. But I don't know yet. There's still a lot of data that we have to see before I can be confident in anything like that. So like I said, Netflix is mainly hands-off. Maybe there's going to be another opportunity to short it, or maybe it starts to form structure that looks good at the bottom. But I don't know until that starts to happen. 80K coming on Bitcoin. It might. I think it's probably more likely that we pop the top first, and then we can see what the supply and demand looks like. Popping the top first and then seeing what happens. But it's possible. It's just I need to see that imbalance of supply and demand happen. It's one of two ways on Bitcoin that supply and demand is going to happen. That we're going to be able to see it. Either we're not able to pop the top, which means devastation, probably lower than 80K, probably lower than 76K if we can't get any kind of pump here. If we do get a pump here, then yeah, then we can make arguments about maybe 80K, but probably a little bit lower. I don't know. We'll have to see. I take it one step at a time, but the big question is there even enough demand to take out short sellers? As simple as that is, right? Is there enough demand on the spot market to pop short sellers? Because obviously you can see it on the liquidation heat map, but you can also see it on the chart. Plenty of people want to short right now. The other thing that you have to keep in mind, though, when it comes to people that are bearish and bullish, particularly on crypto, usually the bearish market participants are a little bit more sophisticated. And that's not a shot at the bullish market participants, but when it comes to leverage, usually they're going to have stop losses, likely have stop losses in profit. So in terms of like how much money could exchanges and market makers make from liquidations, it's usually the case that taking it lower is going to be more advantageous, unless there's just a huge amount of shorters that are coming in. And I think in this case that's what's happening is, even though bearish market participants are typically more sophisticated, I think that because of how the structure is formed, it's still more advantageous to take them out, just because, you know, like we can look at funding, it's pretty normal, which would give you the inclination that, you know, maybe that's not the case. But even if you see like this is nothing too abnormal, it's negative funding, which is already a little bit more rare, but it's not significant negative funding. So, you know, the way I look at it is like, if negative funding's coming in, that's already a little bit unusual, but it needs to be like more significant negative funding before I start to derive any kind of bias from it. Like, it's an interesting point, right? But is it sort of, you know, is it significant enough to lead me to believe that it's going to have any kind of big ramifications on the market? What's up, Traxian gang? Thank you for the raid. The October liquidation event wasn't just another downturn, it was the largest wipeout in crypto. Yeah, I mean it shows how much leverage is in the system, right? Certainly more leverage than we've seen in prior events, right? And I think that, you know, I don't really like to talk about this too much because I've already talked about it a couple times. But, you know, it was pretty shady how Binance went down and everything. And not only did it go down, but there was no reduce only, which should be the fail-safe, where you should always have reduce only, no matter what. I don't think enough people are talking about that because that was pretty shady, man. A lot of people got fucking demolished during that time. And yeah, you can be like, oh, they didn't use good risk management and they didn't build their models correctly, and I would agree with that to a pretty high degree. But still, I don't think it's like, you know, normal for markets to, or at least the biggest exchange, to not allow medium-sized market makers to reduce positions. But yeah, Traxy and the WoW crowd. So the two ways that I'm looking at this right now is on Bitcoin, is we have a lot of equal highs, and what I'm trying to do is I just want to see what the supply and demand truly looks like at this point, right? Because we've, in the last couple weeks, almost a month now, we've just been bouncing between a range. So it's hard to see, like, you know, who's in control. Is it supply or demand? I think the two ways that we'll be able to see that, obviously we're in a downtrend, right? The two ways we're going to see that is either we're going to be able to pop all these equal highs and then see potential reversal there, or hold it. One of the two is going to happen, and ideally taking out these highs as well. And then the other thing is, if we can't manage to do that, then that just shows that even though we can't see imbalance of supply and demand based off of like squeezing out the derivative market, that just shows that supply is still heavily in control. So a dump here would lead to something nasty, whereas a dump here might lead to, you know, new lows lower than 80, but potentially equal lows around 76 to 78. And then we could see a rally off the equal lows. Obviously equal lows are not good, but like equal lows down here, holding it down here is not necessarily good, but how many times have we seen that happen? So if we pop the top first, and then we go for the lows, we could see some sort of rally form here before, who knows what happens after. But if we can't even pop the top, then I think there's an argument to be made that we'll head a lot lower than these equal. I mean, there might be something here, but, you know, the probability of it going even lower is on the table. But so the big thing, if you are bullish, and if we are to go for the highs, this must be held. Like, once we get above these, if we can, this must be held. And then we can go a bit higher, but if it's not, then, you know, it's gonna get pretty bloody. You can just 300x everything nowadays. Yeah, and also, I think, I spoke about this earlier this year, and I think it's what we saw happen. I think a lot of the meme coin guys, at least the winners of the meme coin trenches, I think a lot of them rotated into leverage, because like you said, Michael, the amount of liquidations that came in, in October was just vastly larger than anything we've ever seen in the past. And honestly, it's probably even larger than the numbers are reporting because of how Binance has sort of situated their what numbers they report as liquidations. So just massive liquidations. And it's probably due to the fact that a lot of the meme coin guys rotated over to perpetuals. And you can even make the argument, this is a stretch, but you can make the argument that because meme coin guys came into perpetuals, that's one of the reasons why Bitcoin has dumped so much. Another thing you have to keep in mind is, like, put yourself in the head of like the most degenerate traders on perpetuals. And by the way, there's plenty of them because it's crypto leverage. If say they're long Bitcoin, right? And they're close to being liquidated, what they could do is end up selling spot holdings in order to add more margin to their longs. And if everybody's selling spot to add more margin to their longs, that way they don't get liquidated, that's like a downward spiral, right? Because they're selling spot, which would push the price down on spot to try and avoid liquidation on longs, right? And if they keep doing that all at the same time, then it's naturally just going to keep pushing the price down until we get that big liquidation that comes in. And we already saw that huge liquidation come in, but I'm sure the same thing is sort of setting up again and again. So until we really flush out this, the market participants that are just super degenerate on the long side of the market, we could continue to see these waves getting hit of people just getting completely wiped out. And, it's that downward spiral. I don't know if I'm explaining that well, but like, let's say somebody longed Bitcoin here, right? And price starts to move against them. Now it's like here. And say their liquidation is here. What they could do is they could start selling their Bitcoin, like actual Bitcoin, to push this liquidation lower. But if they all do that at the same time, then it'll push Bitcoin lower, and they'll need to keep doing and keep doing and keep doing and keep selling spot and adding margin to a stubborn long position until until they get wiped out. And I think that's what we saw here on this big move low. We saw it on altcoins more significantly than Bitcoin, but I think that's likely what was happening because, I mean, when you look at the 20 billion in liquidations, right? Likely a lot more than that. Nobody knows exactly how much more than that, but you could easily put in the ballpark of 30, 40 billion, maybe even more in liquidations. And I think so it hits that downward spiral of people just selling spot to add margin, and then we hit that those cascades that we've been seeing until more sophisticated patient market participants sort of come in and save the day. And it's not even that, but it's also people from other arenas, right? So like, let's say that you're a gold trader, but you like to trade other things. You see Bitcoin is dumped a lot. You might be like, oh, Bitcoin's on discount, I might buy some here. So people that wouldn't normally buy Bitcoin might be a little bit more inclined to do it because it's on quote unquote discount. Those sort of things help save markets that are pretty much getting the leverage kicked out of it. And then you also have people that are just taking profits on shorts, which helps temporarily push it up, and then more patient market participants. So it's usually how you save those kind of things. And as it stands right now, we're starting to form a structure that seems like it's has a little bit more confidence in it than the previous structures, not only because the amount of data that's gone by, but also what's happened in the past, right? So let's imagine a world where we see, obviously we never really took out these highs before going lower, which showed a lot of supply. If we did the same thing here where this never happened and we went low again, then I'd be even less confident that we'd be able to pop the top, and it would look even worse. So because this did happen though, and we were at least able to pop the top, that's argument to be made that we can try and do it again and maybe hold it. That's the most optimistic scenario. And the difference between these two is this is only, this was from the beginning of November to around the middle of November. This was like a week or two worth of data, like about a week worth of data. And this one is, multiple weeks worth of data. Like this is like almost at 3 weeks worth of data here versus 1 week of the price not just falling in any one of these scenarios. So that's a good sign so far. So I think it's likely we'll be able to pop the top again. If we don't, that's really, really bad. it's going to lead to huge carnage. And then if we do, we need to hold it, right? It's as simple as that. I see people posting their positions every day. Famous German crypto influencer holding 150 Bitcoin margin long from 95K. Okay, yeah, so that's a good example. So he's saying that a guy opened up a long here, but didn't get liquidated down here. It usually means that they were selling spot in order to add margin to the long so that they don't get liquidated. The issue is when everybody's doing that, that means everybody's selling spot at the same time in order to get their liquidation lower, and that just drives it down really fast. But that's why we have so much volatility, right? And this is not only applicable to crypto, but this is applicable to any market that has leverage. And if enough people are sort of in this mindset of, okay, it's gonna recover. I just have to survive a little bit longer. It'll recover. Then that's what leads to a bubble. I mean, the drawdown so far on Bitcoin, you can already argue, was pretty fucking massive, right? From the all-time highs all the way down to the lows is 36%, 35%. That's already a pretty big drawdown. Could it go lower? Of course it could, but I think it's important to understand like the context of what happened. So anytime, because like if you look at the Bitcoin rally up from the lows, I mean, it was pretty fucking strong. So the market sentiment out there is like, okay, if I can just add margin to my long, I'll survive, because eventually it's going to bounce back up and then I'll be fine. But if everybody's thinking that, then you have a bubble. Like the same thing could happen on the stock market too. It's just the stock market isn't as flooded with active market participants who are leveraging up, right? A lot of the market participants in stocks, like I've said in the past, are usually passive market participants who are retirement and that kind of stuff, where they just don't want to sell, just buy and hold. It's just a question of if you get high enough on the price, will that even make a difference? Because active market participants can start to have really big effects on the market. Like to put this in context for Bitcoin, active market participants at these price levels had much less influence because it was half the fucking price. So it required half the amount of money to maintain the float, to maintain where the price was at. And then if you double that, now you've required double the amount of USD to maintain the float. And then if we were to double it again, it would be the same scenario. Basically just, the demand fighting against the active market participants. It gets harder for the demand to fight against the active market participants, the more expensive it becomes. And you can see that on any financial instrument. He says he has unlimited margin. Yeah, I mean, that's under the pretense that he's going to continue to probably sell spot holdings in order to hold on to long positions. You just can't have... Basically, if everybody's being a degenerate, it's going to fucking pump and dump. I think that's pretty straightforward. But the mechanisms of how that happens exactly is people that are very stubborn in their positions, who don't want to take a loss because they didn't have to do it in the past. All they had to do, like when this happened, all they had to do was just keep adding margin to their longs, and it would eventually come back up. The issue is, what's that pain point in which they don't have any more margin to add to their longs, they don't have any more coins to sell, but other people still do. And then, that's just where it gets really messy. And we already saw the first signs of that. Even it happening, the fact that it happened at this high of a price is pretty surprising, but I think it just showed how exuberant the market was, right? Leverage on leverage, like just keep leveraging up. And eventually the price will bounce back. It's not going to draw down that much, but in these sort of circumstances, that's what we saw, just complete wipe out of the market. Now, again, the defense that's been mounted at these prices has been impressive so far. It looks like there's a chance that we could see at least a little bit of a bounce, right? But the question is that bounce just going to lead to, dealers looking to get delta neutral on having to absorb so many positions? when it comes to legacy market, it doesn't really look like that's the case. But when it comes to internalized market making on bigger exchanges, that could be the case. And I said earlier, what we saw here, this pump that we saw here on Bitcoin, was a lot of, you had Wintermute buying, Binance buying, Coinbase buying, like sort of like a concentrated effort from a lot of those that are very inclined to keep the Bitcoin price at least not at zero, buying at the same time. But those market participants like Binance, Wintermute, Coinbase, and all the bigger exchanges, they're known to be active market participants. Like, they don't think that they won't sell. They'll still sell if they need to. Whereas, like, if you have someone like Saylor buying, like, Saylor's probably not going to sell. He might, but the odds of him selling is way lower than, say, like a market maker or something like that. Can you look at Zcash? Yeah, I already looked at Zcash. It'll be in the recording. I went over it, so that should be posted on YouTube later. And you can pin the YouTube here. I'll do it right now. That's the YouTube if you want to check it out. I gave an update yesterday. It's like 10 minutes long. Yeah, we're gonna have to see. The thing about it is, it's in a fragile spot. Obviously, we've been dumping a lot, so that already automatically puts it in a fragile spot. But not only that, is we don't know what the supply and demand is right now. It looks to me that demand is starting to make a comeback, right? But until I can see that on the price action, because what happens when we're in the middle of a range like this, right? So top side of the range, sort of bottom side of the range is a bit wider, which is good to keep in context because of the cluster of liquidity, but I've explained that earlier. Anyways, when we're just bouncing between a range, well, what does the supply and demand really look like? Does anybody really know? And it's not until we see something significant happen where the leverage market sort of gets flushed out that we're able to see what the supply and demand looks like. But because the lows are further away from each other than the highs are close to each other, that means that the market is, which side of the market is under more pressure when it comes to leverage? It's going to be the short sellers. So short sellers are feeling a little bit more pressure right now, not only because of where price is sitting, but because they're all in the same invalidation spot. Like, if you look at a chart like this, right? Who's under more pressure? Is it the people that are longing it or the people that are shorting it? It's very simple. You look at where invalidations could be, and then you compare, like, okay, well, the top side, the invalidations are closer together. The bottom side, the invalidations are further away. It doesn't mean it's guaranteed to go up, but it means that as far as the leverage market is concerned, more short sellers are feeling that, are sweating in the same spot than longs. And we have to remember that as far as crypto is concerned, in the leverage markets, it's perpetual contracts and wanting to use leverage in crypto. A vast majority of it is just a derivative. It's not actual buying and selling a Bitcoin, right? So if it's not actual buying and selling a Bitcoin, then how much effect could it have on the supply and demand of Bitcoin? Sometimes it does, but usually it's temporary, and usually that's the indication that there is a potential. Well, we're able to see the supply and demand. So if people that are using leverage are not buying and selling actual Bitcoin, then they're not really affecting the supply and demand, except for when it comes to arbitrage market making. So arbitrage market making can lead to these pops. Basically, people that are participating on both leverage and spot market at the same time, trying to get delta neutral, that can lead to squeezing of leverage. But if we didn't have arbitrage market making between perpetuals and spot, then the effects that leverage would have on the Bitcoin price would be near zero, except for maybe some shady stuff that's happening, some manipulation that happens by the exchanges, like Binance. So, like, what is arbitrage market making when it comes to, like, it's just if there's a difference in price on the spot versus the perpetual. So let me open that up. So like right now, on the perpetuals, Bitcoin is trading at 90,097, and on the spot is trading at 90,140. So capturing the difference between these two, and then just doing that repeatedly over and over again, while remaining delta neutral. So basically saying like, I don't want a bias here. I'm gonna take the difference between this price over here, 90,100, and this price over here, 90,065. I'm just going to repeatedly keep taking the difference between that. And I'm not going to have a bias. I'm not going to say it's going to go higher, it's going to go lower. I'm just going to see if I can keep farming the difference between those two things. Because there's people doing that, and they do it in mass because it's a fairly profitable way to go about it. That means that the leverage market will have some ramifications on the spot market in terms of how the price moves. But in terms of the true supply and demand, once that sort of hits a critical spot, that's where we're able to actually see with good probability what's going to happen next on the price. So because you have people delta neutral trying to take advantage of the difference between these two things, it means that perpetuals will have some influence on the spot. And then once it hits a critical spot, then we're able to see, what's more likely to happen in the future. And so the way that some of these models are built is they're built on cross leverage. So they're using cross leverage to take the arbitrage hedge. And when so for those that don't know, with cross leverage, it means that you're using your entire account balance to as margin for the long, so that, or the short. So that means if the price goes down low enough, it can wipe you out of everything, not just the positions that you're opening. It can wipe you out of everything. So we've seen this rise of people taking the arbitrage difference between them, and then a lot of those models, like if you're looking at like 8-figure, 9-figure market making, medium size to small size market making on arbitrage, if the exchange goes down and Binance goes down, and they still have the perpetual positions as arbitrage hedge, and they're not able to reduce those positions, then they could lose their entire account if something like that happens. So because Binance went down and there wasn't an ability to reduce positions, people that were farming the difference in these two prices were completely wiped out. At least a lot of them were. So you saw like people just farming this, right? The small to medium sized guys just completely dusted. And so this is why I talk about like was there something happening behind closed doors between, okay, so if the small and medium sized guys get wiped out, right, because Binance went down, then what were the big guys talking about with Binance? Was there any sort of conversation between, say, Wintermute or the bigger market makers and Binance before this whole thing went down? Because the big market makers and Binance, they love each other because they both make a lot of money with each other. And so maybe, and this might be a bit tinfoil hat, but maybe Wintermute's like, hey, can you just turn off Binance for a little bit so that we can wipe out all of our competition? Because if a small to medium sized arbitrage market maker was having better ROI than, say, Wintermute's models, then they could get scared that they're going to get overtaken soon because they're just getting outcompeted by a smaller team that's more efficient. So instead of having the smaller team that's more efficient eventually overtake us, let's call up Binance and say, you need to take them out, or we're not going to provide liquidity anymore. So even though the small to medium time, market makers were more efficient and ultimately would have been better for crypto as a whole in the future, you can argue that maybe some shady stuff happened behind closed doors. And I think that's why it's like, I don't really want, the reason why I talk about it a lot is because I don't really want that to go unnoticed, right? Like people say fuck Binance and whatever. Well, maybe there's a reason why a lot of people say that, because obviously they're acting in their own self-interest because they're a business, but at the same time, there's got to be some sort of like I don't even want to say regulation. I guess the way that it'll bounce back. I think the future is the next time that these medium-sized market makers start to challenge the bigger ones because they're more efficient. I think what they should do is build in their models, if they can, instead of using cross, use isolated. That way they can never be wiped out by some sort of like manipulation like that. And also, like, Binance will eventually lose market share over enough time because that's nature, right? It's the same thing in any business. A lot of the Mag 7 hasn't been around for an incredible amount of time. Like these companies like Apple and Amazon and Google and all that, they haven't been around for super long. And normally how it works is eventually they'll get outcompeted, or the people will move on to a new industry because of technology. So eventually these will also come crumbling down. But the question is, how long will that take? The same thing with like the S&P 500 or America. Just the nature is that, and Dalio also speaks about this, but like a rising power challenging an existing power in that cycle, right? So like I think it's pretty obvious that there's a fear that the rising power is China taking on the United States, and maybe eventually China will overtake the United States. And then there'll be another country that comes up and challenges China, and eventually China will be overtaken by that country. So whoever the winners are in any given market or arena, they're not guaranteed to be in that position forever. And so maybe maybe Binance will. We've already seen a lot of competition of more efficient exchanges. Maybe Binance won't be around for forever, and so that's another solution as to how we see sort of this stranglehold of power start to redistribute. I don't want to believe in such manipulations. Yeah, but I don't know. Like, can someone tell me why Binance went down and if it was reasonable? It's the same thing that happened on silver, right? We saw it on silver as well, where the market maker and the exchange are buddy-buddy, right? So silver randomly goes down because of some random cooling issue on some computer in Illinois? Or is it because that silver market makers, had a bunch of offers but no quotes, and they needed some help? If the big market makers and the exchanges are both buddy-buddy, and they both make a lot of money working with each other, and one of them is under stress, they could, call on the other person to help them out, and ultimately even say, like, you know what, we're not going to provide liquidity unless you do this. We provide liquidity on silver, but we also do it on all these other things, and all these other things we're gonna pull the rug out on all those other things if you don't help us here. Surely the Binance intern just happened to spill coffee on their mainframe in the worst possible moment. Yeah, just some random intern accidentally spills coffee on something important at the perfect moment. That's really good, Arju. I like it. The game is deep. Yeah, but I'm trying to show it to you I'm trying to explain it as simply as I can so you guys can understand all the moving parts of what's really going on here. So one of the nice advantages, though, of like how we can tell where price is likely to go next is when Wintermute or whatever market makers that are arbing. I don't know exactly if Wintermute arbs between perpetuals and spot, but there certainly are market makers that do that. When they feel the sting, and then we can see what the true supply and demand is, that's where we can know where it's likely to go next. And it's not even them really feeling this sting because they're so quick. It's mainly other retail leverage market participants when they feel the sting. So basically when a bunch of degenerates on leverage lose at the same time, we're able to see where the price is likely to go next, because it puts into challenge what the true supply and demand is on the spot market. But like, think about it simply, right? This is the, on the left is the spot market. On the right is the leverage market. There's a difference between what the price is on the leverage market and the spot market. It usually is fairly close, but there's certain times where it can get really, the spread can get really wide, which is good for them because that's where they make the most amount. But yeah, I mean, like there's a $50 premium between them right now. So, you know, you sell this one and you buy this one. You sell this one and you buy this one, rinse and repeat, and capture the difference between the two. And then when the premium flips to the other side, you do the inverse. Infinite money glitch. Yeah, I mean, they're not capturing huge moves, right? It's very small ROI, but they're doing it again and again and again. So, and one of the reasons they're able to even do this is because of all the degenerates on the leverage market. If there was less degenerates on the leverage market, then they wouldn't even be able to do it. And the thing is, they're destroying the degenerates on the leverage market. They're wiping out. Like today was not, it hasn't even moved that much, right? But let's look. Let's see how many people got wiped out today, even though it hasn't moved that much. In the past 24 hours, 97,000 traders were liquidated. The price hasn't even moved that much in the last 24 hours, but 97,000 people were wiped out. That's fucking crazy, right? Like, if you look at the Bitcoin daily chart, this is the daily candle. So, almost 100,000 market participants gone on a daily candle this fucking small, relative to the size of other daily candles. Then there's other ways to arbitrage too. Like you can look at the difference between two different exchanges, but then, you know, that gets a little bit more complicated. But, you know, and this is actually, if you don't know, FTX, you guys remember FTX with SBF and stuff. Alameda Research was his first sort of venture, and all they did was arbitrage between BitMEX and other exchanges. And they, just by doing that, by the way, they reached the leaderboards. I think they were in the top 10 or top 20 of most profitable traders on BitMEX simply by just capturing arbitrage. So those little percent differences, they don't seem like much, but they compound. Honestly, BitMEX has been going lower and lower on their volume and market participants, so I'm sure Alameda Research is probably still in the top 10, top 20 on their leaderboards. I haven't checked, but I wouldn't be surprised. Now everyone in the chat's figuring out how to make an ARB bot. But you can capture much bigger moves, much more ROI by having like discretionary like bias on where you think it's gonna go next. That's just hard to do, really fucking hard to do. But that's what I show on the stream all the time. It's way harder to do than fucking arbitraging. Arbitraging is the same shit no matter what. You just have a bot that's just capturing the spread. That's it. I mean, ChatGPT, you could probably build one on ChatGPT. And I'm not trying to talk shit about them because I'm not saying their models aren't sophisticated, but obviously it's much harder to call direction than it is to just capture the delta neutral. I probably went a little bit too advanced today, but hopefully some of you guys were able to understand something of what I was talking about. I'm eating algos and bots and for breakfast without salt and pepper. What's up, Pharaoh? Give me 1 second, guys. Killer price action? Yeah, it's a fucking frenzy out here. It for sure is. And it's just because, like, sometimes, I told you guys this earlier this year, the price action for like from quarter 2 to 3 is where I'm best at calling where it's going to go next. It starts to get a bit more difficult in quarter 4 and quarter 1, and I think it's just there's a lot of disagreement on where the chart should go next and where supply and demand really is. So instead of being able to read structure as cleanly, it gets a little bit more difficult to do. But I'm still able to do it. The only issue is like maybe the opportunities aren't as frequent. I have to wait for like really obvious things to happen, which could take some time. I know you're taking a break for the winter, Latvian Sniper, but is there any penny stocks that you find interesting right now? I'm sure the chat wants to know, because you said your last one popped off, right? What was the last one that... Does anyone remember the last one that Latvian Sniper mentioned in stream? I don't know. The vast majority of like quote-unquote crypto influencers and all that kind of stuff, they have no fucking idea, dude. They're still trying to figure out where the support and resistance is. SMX. Yeah, that's crazy. When did you talk about this, Mr. Sniper? From the lows, it went up around... Jesus Christ, look at that fucking move. 10,000%, dude. That's nuts. Last stream you talked about it? Jesus Christ. Last stream was about a week ago, so it was probably not 10,000%. I think it was like right here. Still, 1,000%. That's pretty good. So you don't got any more for us, Latvian Sniper, or are you just hands off for winter time? Oh, we got another one here. IVP. What's the fundamentals looking like here? Inspire Veterinary Partners. Okay. Yeah, that's nice volume. Outside the volume, I don't really see much here. I can't even imagine what this was trading at. Look at this chart, guys. Look at this fucking chart. Do your own research, yeah. Do your own research. But look at this fucking chart. And then what do you notice, right? The volume that came in. It's kind of interesting. But what do you think about the balance sheet? S-Case, what are we looking like for the balance sheet? Out of 10. Give us a rating out of 10. I think the pet market is always going to do pretty good as long as the economy is doing pretty good, right? So like a 4 or 5 out of 10 for the balance sheet, but so you're just mainly playing off the chart then, right? Why does a 4-year cycle keep working? Well, it's just like anything, right? It's self-fulfilling prophecy. If enough traders are taking the same trade, then... Also, maybe by the 4th year, we see like peak greed hit the market. Maybe it's like the way humans function or something. Like the way that like the human mental works. It's like if things are still going good by the 4th year, let's start ramping it up even more. Market cap is 500K, but in the past 2 weeks it's had 1.38 billion in volume. That's fucking nuts. Yeah. So we'll see how it goes. I mean, it's got a lot of room to run if it does want to go back up. Just a low risk dollar cost average. Yeah, I mean, don't bet the whole farm on any individual play. It could work out, it could not, right? Not financial advice. This thing could be going sideways for the next year. McLeod? That's pretty good volume. This thing hasn't been around for too long though, right? But yeah, a little bit more data would be nicer on it. I see the vision though. The volume's still really good. It's just, yeah, same thing though. I haven't looked into the fundamentals of this at all, but this is the wrong one. Well, this has a lot of volume. The BSE. Oh, it's the same chart, but it has been around. Is it bad that I don't know what this is? This is why I like volume on the dump more than I like volume on the pump, right? Volume on the pump led to new lows. Volume on the dump, maybe bounce back. What's this one? CETX. Ooh. God, look at this chart, guys. Oh my god. Holy shit. So throughout all of this trading, right, from like 2000, looks like 2004 or 2003 actually, till now, look at how much volume has come in this last week. It's fucking nuts. Oh, but this volume came in on a pump, which is a little bit concerning. We'll have to see. Yeah. Starts at 80 million per unit, yeah. Is everybody turned into a penny stock gem hunter now after they saw what S-Case was doing? Have you guys been looking at the Forex charts, like the euro against the dollar at all? The euro against the dollar is an interesting spot. Yeah, if we do see a stronger rally come out of this than looking here, but the way to break the structure now is even if we retest here, then the structure breaks and we finally take out this low, which should line up with the dollar index chart getting above 102. So the euro, still bearish on the euro relative to the dollar. And then I could change my opinion depending on what happens here. So underneath, 1.14 pretty much. It was trading at 80 million per unit. Now it's trading at like 8 cents per unit. The volume is just kicking up like crazy. Oh, I don't think I looked at Solana for you guys. So Solana's is pretty interesting. You have pretty neutral structure. This sweep was really hard for me to tell. I don't know if Tom or if you're still here, but it's really hard to tell if that was a good enough sweep. The good news is the fluidity is still holding nicely. So the next spot after that is holding this, which is kind of failing right now. It's trying, but it's really in the hands of Bitcoin. The Solana chart on its own looks like dog water, but it could get bailed out if, Bitcoin does pumps, which is never a good spot to be in, but like we could see Solana pop up. I think it's a bit too late to short it. But if it does pop up, then it looks good to short it. And you got to let it pop up a good amount here. Like if you look at the relative highs and lows, like something like this, because if it follows structure, then it would be here. So like more specific, like 188 would be good if it pops up that much. And then crash it, because the structure already looks bad. But I don't know what Bitcoin's going to look like when we're at 188. If Bitcoin has rebuilt a lot of good structure at 188, then the short doesn't look as good. But if Bitcoin looks fragile while Solana's up here, yeah, then we just drop it. It's unfortunate because Solana was doing so good and then it got smashed hard. Again, I think it's too late to short it where it's at. It could dump here, but like, you know, if you look at like the relative lows to the relative highs, you're kind of shorting the bottom. And you know what's interesting about this is, you know how I said the meme coin guys are heading over to the perpetual contracts? And then I talked about how when like their long positions are under pressure and they're close to liquidations, they'll sell spot to add margin to the long positions. That way they don't get liquidated. Well, meme coin guys love Solana, right? So in a downward spiral, they're probably unloading Solana spot to save their Bitcoin longs. And if they're unloading Solana spot to save their Bitcoin longs, then of course Solana is going to feel a ton of supply pressure. Does that make sense? So like, they have a Bitcoin long from who knows where, right? Let's just assume it's like from here, and it's going down, and it keeps going down, and it gets close to liquidation. Well, what they can do is they can sell some of their Solana from their meme coin trenches to pull their liquidation lower. And then price goes down even more. They sell even more Solana to pull their liquidation down lower. They sell even more Solana to pull their liquidation down lower. And they keep doing that. And it's like, you know, one of the main reasons why Solana has actually been getting beaten up so much harder than Ethereum, I think is because of that rotation of meme coiners into perpetual contracts. Yeah, it's exactly. It's also, as funny as it is, it's also Fartcoin and those other meme coins, right? Like, it's another argument why meme coins have just been getting slaughtered, because the spot supply pressure is so overwhelming because they need to add more margin to their degenerate long positions, hoping that they don't get liquidated. So this is a really sad thing too, because at some point they run out of spot coins to sell, and when they run out of spot coins to sell, they can't add margin to their longs, and they already have all their eggs in one basket, right? They need this long position to survive and for the market to go back up. And then if it doesn't and they get wiped out of everything. They get wiped out of the spot that they ended up selling and that position that they were stubbornly holding on to that they didn't want to let go. So what we saw in these last couple months was the absolute culling of meme coin guys. Because if they made their wealth from meme coins, I don't think they know how to, participate on perpetuals. It's a whole different beast. Perpetuals are a whole different beast than meme coins. They're way harder. Well, yeah, I'm sure some of them are holding large Solana spot bags, or they were holding it before they needed to add margin to their longs. And then, yeah, sure, some of them probably have fucking Fartcoin or Pepe or whatever. You got so many equal lows here on Fartcoin. Dog with hat. Honestly, this one, even though it got completely dumpstered like everything else, it did look a little bit better than some of these other meme coins. And you know, when these things happen, it's usually those smaller caps that just get slaughtered because, you know, they got to sell. If they're going to sell coins to add to a Bitcoin long, and they think Bitcoin's going to go up, do you think they're going to sell their Bitcoin to add to a Bitcoin long? Maybe some of them, if that's all they can do. But a lot of the times they'll start selling the dust. And if everybody's selling the dust, then the dust charts just get fucking slaughtered. But this is like how they all behave together, right? Like I talk about market sentiment all the time, being like related to, like all the coins kind of are related to each other in some degree. Like if Bitcoin was down 5% right now, what do you think your watch list would look like? Everything would be down, right? That's one of the reasons why. Another reason why is because if large market makers are a little bit more hesitant to provide bid liquidity, on Bitcoin, do you think they're going to be more confident in providing bid liquidity on Dog with Hat 69 Green Frog coin? IVP got a death notice warning from NASDAQ and appealed, so now everyone is speculating on the outcome. Yeah, this is the one with the big volume, I guess. I don't know what this company is, though. I can see that it's veterinary partners, so it's, you know, obviously something to do with animal doctors, but it's certainly not a good sign if people can't afford animal doctors for their pets and stuff. In terms of like the overall health of the economy. But it's another thing of exuberance, right? Like there could be some like mismanaging on this company that was the reason why they're struggling so hard, or maybe it's the lack of demand coming in because of like what I said, like late stage bubble. You're gonna have a lot of people that are gonna be on credit cards and debt and stuff like that, and max exuberance, and you know, getting pets that they necessarily can't afford, or going on vacations that they necessarily can't afford. And if a lot of them do that at the same time, then we hit a bubble. What happened today with Ethereum Bitcoin dumps? ETH didn't follow. Yeah, isn't that interesting? I keep pointing that out, that Ethereum actually has been doing slightly better than Bitcoin during a lot of these dumps that come in. And I think one of the main reasons for that is, let's say that you sold all of your Bitcoin, which you should never sell everything, right? But some people do. Let's say if they sold all their Bitcoin like here, right? And we did see a lot of volume come in, so we know some people did that. If they sold all their Bitcoin here, they have two options, right? If they're now bullish on the markets and they're like, oh fuck, I wish I didn't sell it here, and now should I buy it back? Well, the caveman brain is thinking to themselves, well, if I buy it back here, I'm going to have less coins than I had in the past, and I don't want to have less coins than I had in the past. So why don't I just look around and let's see, maybe Ethereum, maybe I should buy Ethereum. I think that's that rotation that we see, where it's like, you know, they have the option to buy back and have fewer coins, or they could shop around. Maybe I should buy Ethereum. I think this is what kind of drives altcoin rallies, is when you have massive Bitcoin dumps and then Bitcoin starts to recover, and you've shucken out a lot of the retail, as they start to shop around and look for other things. And if we start to see that dynamic play into Ethereum, where let's say Ethereum cracks a new all-time high, right? And then has huge dumps that come in and people start to sell off there, they might rotate into even smaller coins outside of Ethereum. And that's where it sort of sparks the fire of an altcoin rally. If you remember, most altcoin rallies that have happened in the past usually play out like that, right? Like Bitcoin has a significant dump, like that scares everybody, and some people sell, and then Bitcoin starts to recover and actually does quite well. That's when Ethereum starts to pump. And then Ethereum does the same thing, and that's when the rest of the altcoins start to pump. It's that rotation of like the caveman brain thinking, well, I don't want to buy back and have less coins than I had before. Let me just rotate this cash into something else. Because if Bitcoin's doing good again, that means that risk on is back on the narrative, and I can go even deeper into the alpha risk. What impact has Vanguard announcement had? I mean, it's gonna have some impact, but it's a pretty big pool. I mean, Bitcoin trades at like 50 billion 24-hour volume. It's a pretty big market cap, right? Like 2 trillion. So it'll have some effects, but a lot of the time, the quote-unquote insiders will have known the rumor, and they'll buy it and then sell it by the time it becomes news. As the thing about the news and stuff is just use the price action, because like it's not going to lie to you. There's no insider stuff happening. Everybody can see the chart for what it is on the price, and that's important. You just have to be better at understanding the structure of the price than other people. And really all that comes down to is where does the leverage market feel pain? After the leverage market feels pain, how does the price react afterwards? Because that's when we see the true supply and demand on the spot market. And if there's some sort of reversal that happens after the leverage market feels pain, that reversal will likely have some legs to it, because it's shown you what the true supply and demand is on the spot market. You think Bitcoin holders are starting to rotate their Bitcoin into ETH? So this brings into the question of like institutions. I don't think institutions do that kind of stuff, but in the past, from like retail market participants, we've definitely seen that happen where, just the average, maybe not a sophisticated retail market participant who buys and holds for a while and then sort of starts to rotate. Yeah, I think that's what we see. And the question nowadays is like, okay, well, how many of those people are left? Haven't they gotten rinsed in the past? And I still think that there's a good amount of them left, because while institutions have absorbed a lot of the supply of Bitcoin, it's still pretty negligible when you look at like the total supply. Like let's say that like institutions and governments have like 10% of the Bitcoin, right? That still means that most of the Bitcoin is in the hands of individuals. And when Bitcoin prices get high enough, then that's even if there's less people that are willing to do that rotation thing that I was saying, it's still the same effect, because the amount of money that was made on Bitcoin is so much higher because the price was so much higher. So it's about the amount of people who will rotate, and also the ratio of how much money will rotate. And more money will rotate even if it's fewer people, if the price of Bitcoin was so much higher. What's up, Fire Egg? Fire Egg, where has Nixo been? Is he grinding out the 5-5 tables at Hustler? The 5-10 tables at Hustler, is that what Nixo's been up to? It's probably because Link has not been doing too well. I bet you if Link starts to rocket, we'll see Nixo again. Have you noticed that the ETH exchange balances? I haven't noticed that, no. I usually only pay attention to the Bitcoin balances, but maybe I should look at the ETH ones too. It's a good point. I think he's just talking with the CEO of Chainlink for business expansion. He really wants Chainlink to do well. Okay, we might see a little bit of a flood coming on Bitcoin here. Got a bunch of equal highs that could pop right now. Let's see, is there anything on the lower time frame here? Like a small flood, we'll see. Yeah, there's a small flood that could happen. A little bit higher. We've already dipped into it a little bit, but we haven't hit the bigger portion of it. So this, even on the 1 minute, this is an example of like, you could see an imbalance of supply and demand, depending on what happens here. It could happen like any minute. I don't want to jinx it though. I think it's too late. How about this? If it pops the top, you guys get a game of marbles. So we just need to get above these highs. You see how many times it's touched the highs? So if they shorted Bitcoin in the last 5 hours and they have local invalidations, they're likely all resting in the same spot. So a bunch of people who have shorted in the last 5 hours are sweating right now. And the market will go ahead and take them out, hopefully. It could go for the bottom side too, though. We'll see. It's kind of similar on the bottom side. It's just a little bit more spread out. You see on the bottom side too. All these tags down here. But these ones are a lot closer together than down here. They're still pretty fucking close though. The bottom side is still close as well. Did I hear marbles? Come on, let's give us a little bit of fireworks here, Betty. Load up marbles, I'll take care of taking out the top. Uh-oh. SK's gonna pop the top. Now there should be a decent amount of supply here though, because people don't want to lose their short positions. It's just the stubbornness, right? Usually it gets punished. Being stubborn in the market usually leads to being punished. If it's a big enough pool and, you know, it's harder to manipulate like Bitcoin. And Ethereum. Looking for 0.05. Yeah, on Ethereum, you now want to regain, well, you technically want a lot more than that. You want to, yeah, so first you want to regain 0.04 pretty much, more specifically 0.038. And then we can talk about higher, but maybe, I don't know yet. I can tell you that the ETH against Bitcoin chart does look good. So that means if Bitcoin pumps, ETH should pump a lot more. That's pretty normal, right? But even more so than what we've seen the last couple of years. I think the probability of us getting a pop to the top is gonna happen. It's pretty high likelihood, but when that happens, we enter like a moment where the supply and demand is truly tested. So it could go well, it could go poorly. If it goes poorly, then we go a lot lower. It's actually not bad to keep building up momentum and keep trapping more and more short sellers in the same spot. What I mean by that is like if you look at the 4 hour on Bitcoin, oh, is it gonna pop? Very close. Short sellers are panicking right now. They probably just have stop losses set out. But if you look at like the 4 hour, the more times we bounce off this, it's actually better. So like if we go up and bounce off of it again, as long as we hold the higher low, bounce off of it again, as long as we hold the higher low, then this has a much higher chance of actually not just breaking down afterwards and holding and maybe going higher. Structure looks bullish. There's part of it that looks bullish. There's some of it that looks bearish. It's if you take in more context, like if you look at like a month's worth of data, it actually does look rather bullish. But if you're looking at like what's happened in the last couple of weeks, there's some bearish stuff happening. You sound quiet and calm today. Yeah, I mean, it's because price isn't moving too much. All right, here we go. Can we get a little bit of a flood action? There's some green that's coming in. So you see that green that just came in, these orders here? These aren't necessarily buys. A lot of these are going to be short stop losses. So these shorts are closing right now. See that green that just came in? That's shorts that are closing a lot of the time. So people betting against Bitcoin that are hit their invalidations and they're closing their bets against Bitcoin. Which what it does is it provides liquidity for people to fill their own shorts. Like if you want to fill a big short position, that's where you could do it because there's so many other shorts that are closing at the same time. So it's kind of like pushing to fill to steal all those orders so that you have enough liquidity to fill your own. You did your part, where's marbles? Is that all we're getting out of that? That's not good. Hopefully we can get a little bit more. I mean, it's just a 1 minute so far and we're pretty far off from the hourly. But that's not very good so far. I don't think we got all of it. Let's at least check the rough estimate. Yeah, we only got some of it here. You see how we didn't really get the big portion of it, so we could still get more out of it. That's pretty pathetic if that's all it's going to do. Looks like liquidations. That would be good. I mean, it would suck for the people getting liquidated, but most of the time, the short side market, the bears are more likely to use stop losses than liquidations. Do you think Michael Saylor walks into a restaurant and the wait staff are thinking, man, what are you doing spending this much money on food? You should be buying Bitcoin. No, the wait staff probably wants him to be buying XRP. Probably try and convince him to buy XRP. Thoughts on using asymmetric, cheap polymarket up or down 15 lines ahead? Yeah, you can use the hedging in polymarket's getting really popular. The issue is the lack of liquidity. So you could either do hedging on Bitcoin through Polymarket and regular exchanges, or you could even do hedging from Polymarket and Kalshi. But the issue is the lack of liquidity is not really there. And that's not even applicable to Bitcoin. Like if you wanted to do arbitrage hedging through Polymarket and Kalshi, you could do it on almost anything as long as there's a decent enough spread. And there usually is. Again, it's usually not the spread that's the issue. It's usually the lack of liquidity. Oh, well, the thing is, like, the reason why I made that joke, Griffic, is because most people look at XRP and they don't understand how market cap relative to circulating supply works. So they look at XRP and they're like, oh, XRP is trading at $2 and it's one of the big cryptos. If it even gets close to what Bitcoin's like, it's going to be, worth 10,000 a coin or whatever. But most normies don't understand, like, even the basic of how circulating supply works and stuff like that. Obviously, if XRP was to get to the prices of Bitcoin, who knows how big that market cap would be, but it's certainly, I know that it would be, I don't even think possible for the amount of liquidity that's even out there. You need every single thing to collapse, and only XRP would be around, and then maybe you could get close to the prices of Bitcoin, which is not really realistic, right? But like the person that doesn't understand crypto just sees, oh, Bitcoin's trading at 90,000, XRP's trading at $2. If XRP even gets a fraction of the size of Bitcoin, then it'll then I'll be rich. But the difference is how much Bitcoin is circulating out there versus how much XRP is circulating out there. It's like people saying, like, they buy like Zimbabwe dollars with US dollars, and they're like, okay, well, if the Zimbabwe dollars just get even close to the US dollar's value, I'll be rich. But how much Zimbabwe dollars are out there relative to the market cap? Or Venezuelan currency as well. Market collapse and XRP seems like it could happen. And certainly the Uber drivers of the world would love that if XRP would soak up all the liquidity. So electrical cost or energy cost is a good point, Griffic. I believe the average electrical cost to mine a Bitcoin right now is at like 74K. And there's an argument going around saying, oh, Bitcoin has never gone below its electrical cost to mine it. Which is technically true, but that's like, relative. It's taking an average. Like farming Bitcoin in an area that has much cheaper electricity than, yeah, exactly. Good point, Latvian sniper. Iran, it's 5 to 10K USD to mine a Bitcoin. Whereas, like, if you do it in like by where the AI is setting up shop, the super data centers or whatever, it's going to be a whole different ballgame. But like if you average it out, yeah, the chart going around averaging out the mining of Bitcoin is sitting at like 74K right now. But that like I said, that chart doesn't really matter because you can have people mining, like what Latvian Sniper said, you could have people mining in Iran or Texas or somewhere where energy is a lot cheaper, and they'll just get way more. They'll just scale up a lot quicker. So if we do go under the average electrical cost to mine a Bitcoin, what that'll mean is that energy will more value will be put into energy, and how efficient and low cost that energy is. So technically not a bad thing because it makes everybody sort of wake up to this idea of, oh, we need more energy, which is true if you want to compete with China regardless. If you want to compete with China, you need more energy. The United States, that's one of the biggest pitfalls, is that it doesn't have enough energy. So it might wake up. It's either going to consolidate a lot of power into areas that have cheap energy, which is the most likely thing to happen, or it'll wake up the giants and force the United States to have to pivot even harder into producing energy. It's just that the United States, we're a lot slower at that kind of stuff. We're not as quick. Like, China can build out infrastructure at a fraction of the time that the United States can. And you can even argue, like, oh, well, I thought China was supposed to be the more commie place where there's more regulation and stuff, and US is supposed to be more freedom and less regulation. But honestly, when it comes to certain sectors like energy, that might not be the case. Maybe socially it's the case. But on the economic side, it's starting to shift a little bit. And by the way, when I speak out that kind of stuff, I could completely be wrong about it. It's a very complex issue. So some people in the chat probably know more about that than I do, but I'm just looking at it from like, from what I understand about it. And I certainly could be misinformed or at least inaccurate on some of the stuff I said about that. Hydro energy beside a river. Yeah, I mean, I don't think it's any. I don't think it's a far out reach to say like energy is going to be probably the most important thing in the future as technology continues to grow. And then, of course, the cool thing about Bitcoin is obviously it's built off energy. I think there's been interviews with a lot of the big Mag 7 CEOs lately of them talking about like, you know, energy is Bitcoin is like energy. It's kind of true. I mean, Bitcoin is just the currency of energy, and if energy becomes even more and more prominent, then the currency of energy would stand to reason to be pretty valuable. Regulation in the United States leads to lobbyists and private companies blocking many things that are for the common good to boost their profits. Yeah. That's one of the disadvantages of late-stage capitalism with democracy is lobbyists. I don't think there's anyone out there that doesn't, unless you're not somebody who is interested in lobbying the government, I think you should obviously be very opposed to lobbying. I think lobbying is really bad, and it's like you can say like, oh, politicians are scumbags or whatever, and for the most part that's probably true, but anybody in their position is just acting off human nature, right? They're just like, let me build me and my family's lifeboat even bigger by taking these bribes. It's like, yeah, the person doing that's a piece of shit, but a lot of people would do that. That's just in human nature, right? Like a lot of people in the chat, you might not accept it because you're not in that position right now, but if you were in a position of political power and somebody comes to you and offers you a big check to vote a little bit different on one of the policies, a lot of people would take it. And so instead of like blaming the politician, we have to blame the system that even allows lobbying to be a thing. And if you're truly a competitor in the private sector, like let's say you're a business owner in the private sector and you're doing well, and you from a merit-based approach, like you're just, you know, either quicker than your competition, maybe better customer service than your competition, whatever gives you that incremental edge, you should be in support of abolishing lobbyists as well, because lobbying is basically just trying to change the rules because you're losing. There's some smaller team out there who's more efficient, and they're kicking your ass, and instead of trying to outcompete them, which would be better for everybody, instead of trying to outcompete them, you just try and change the rules. But if you weren't able to change the rules and it was all based off competition, then like who said that? Harju would be, that's right, it's for the common good. One of the beauties of capitalism is that there's competition, right? That's why it's lifted so many people from poverty, is because you know, if you make a product that's cheaper and better than the old guard, then you will ultimately, the market will eventually realize that, and ultimately you'll win. But here's the thing, what if the old guard says, uh-oh, you're not allowed to make the product the way you're making it? That's against the rules now. Then it's like, of course the old guard's going to maintain control, and instead of the consumer getting a cheaper, better product, they have to continue to buy the older, less efficient, less good product, which not only hurts people who even want to try and compete with the big dog, but it also hurts everybody, except for the big dog. And what the big dog doesn't realize is it's globalization now. If we continue to do that in the West, if the West continues to just reward less efficient competition, then eventually it'll sink the whole boat, because China will just override everything. So it's like short term they want to hold on to power, but long term they're going to lose everything, just like everybody else. And then because we're on a global stage in competition, that would ultimately lead to other countries who don't do that to overtake them. And then the old guard loses everything regardless. So instead of like trying to be better at competing, they'd rather change the rules, and that'll work for the short term, but the long term, ultimately the whole game gets ruined because of it. You can see that especially in the banking in the United States, still 15 years behind. Yeah, I mean, that's the whole Fed Reserve thing, right? You would think that the Fed Reserve, like, it's got the name Fed in it, right? It should just be a government organization, but we all know that's not the case. It's controlled by all the major banks in the private sector. Any idea why VIX is rising? Yeah, it's a bit concerning, but it's not too bad. One of the reasons why it's also not too bad is because you have smaller caps that are actually doing okay right now. If everything was down, it was like CVS is doing good, Chewy's doing good, General Electric. If everything was down, that would be a little bit more spooky, because the VIX, we're just seeing a little pop on it. It's not anything significant just yet. Bottom side structure still cracked. So what I'm thinking for the VIX is we might get a little bit of a pop. So we might see some bleed come in on the S&P this week, but I don't think it's going to be anything major. If it is something major, that's a huge red flag. Like that's like sounding the alarms and everything. Like that's really bad. Ring the bell. But I don't think that's going to be the case. It's more likely that it's going to be, we might be in for a little bit of a bleed on the S&P, but I don't think it's going to be major. But if it is, like I said, if it is major, that's a big abnormality in a fragile structure. It could lead to something really, really bad. So dipping a bit on the S&P is fine, but like if we see major volatility hit at a time like this, it would be an abnormality on a local structure while having a high time frame structure that's fragile. It could lead to something really, really bad. You tried creating an AI agent and fed it crypto charts and data. The results were, yeah, I mean, the AIs that are out there was already the test, right? They're not that good. I mean, they're good. AI's like smart and stuff, but the markets are like the most competitive thing. So, and if there is an AI out there that can consistently beat the market, odds are it's black box to some degree. But my whole thing has been like, bots get slaughtered pretty often. If the bot is made around trying to pick directional bias, it's likely going to lose in the long run. If it's made to capture arbitrage opportunities, it'll likely do better for a longer period of time. But it'll likely eventually get overtaken as well. Yeah, and the other thing you might be seeing with that, Reaper, is the reason why the stock, it's been doing better in stonks, is because stonks just go up and to the right so fucking often. Like, crypto obviously has been getting beaten up for a while now, the past couple months. And so, because think of an AI trading bot like a financial advisor. It's not incredibly sophisticated. All it does is buys, and then the market inflation rewards the buy. Like, even though stonks that are technically better from a fundamental perspective they've been getting crushed by how well the Mag 7's doing, they're still doing okay because what they're traded against is the fucking dollar. It's so easy to be an investor in a bull market if you're just buying and not selling. I think one of the great equalizer for any market would be eradicating inflation. because then only the most sophisticated market participants will actually continually find success. It won't just be like, oh, inflation's going to bail everybody out, the market's going to go up and to the right forever because what it's traded against is going down and to the right forever. If you completely get rid of inflation, you only get the best. There'll be way less bloating in every sector, even in the investing sector, of course, but in every sector, way less bloat, way less legacy. That is the reason why success continues to happen for certain people, is because legacy and inflation. Like, I think it's crazy to think that certain companies are just so much smarter than the average person. That's why they're doing so much better. That could be the case to some degree, but it's certainly over-exaggerated. I think people, particularly people who are in positions of immense power and wealth, overestimate their intelligence compared to the average person. I think everybody in the chat probably believes that they're smarter than the average person. They probably think that nobody has common sense and everybody's a dumbass. That's average. I think that's that could be an ego thing that could eventually, lead to hitting your peak or whatever. The average person is smarter than we assume, even though maybe they're not as smart as we believe we are. And like, if you consume that slop, right? Like the slop on social media that like interviews people on the streets, like name 5 countries or like that kind of stuff. Yeah, of course, it's going to seem like everybody's a dumbass, because those are the only interviews that you'll see that will reach your For You page or whatever are going to be the ones that show the dumbasses, because that'll make you feel better. If you're like, oh, this person's so dumb, I'm not so dumb. That's what gets clicks. That's what reaches your algorithm. But the reality of the situation is, like, even you Europeans, right? You probably think all the Americans are dummies. And just true, every country has dumbasses, right? But certainly it's also because the social media algorithm, like even YouTube or TikTok or whatever, Instagram, by the time it reaches your For You page or whatever, it's likely because it's feeding into this idea that, oh, I'm smarter than they are, and so now I feel better about myself. Reaper, you didn't quit your Google AI job because I was saying that you were getting rid of human labor, right? That was just your own decision. Fireworks incoming? Certainly could be the case right now. Some fireworks could be incoming. I'm sure there's like 7 smart people. Dude, Reaper, I did not mean to have that much influence on your mental. I'm sorry about that. So Reaper came in a couple months ago. Okay, you're joking. All right, never mind. I was gonna say Reaper came in a couple months ago, and he's like, "Yeah, I work in one of the top dogs at Google AI." And I was telling him like, "Oh, so you're responsible for a bunch of people losing their jobs?" And I was joking when I said that, but obviously, hopefully that didn't have any significant influence on them leaving that job. Here's the thing about AI, right? And technology in general. Technology has always, quote unquote, eradicated jobs. From, I mean, even all the way down to like a shovel, right? Even a shovel has gotten rid of jobs when the shovel was invented, or the spade, or whatever you call it from where we're from. Technology always, quote unquote, eradicates jobs, but there is a portion of it that actually adds jobs. The question is that ratio of eradicating jobs versus adding jobs. That ratio has normally been within growth in GDP and growth in businesses has normally been able to outcompete that. So like, because the shovel was invented, a lot of people lost their jobs for digging with their hands or whatever, but so many more companies were able to start digging. So now we've got digging is just, shovel's not a good example, but I'm just saying like any technology could eradicate jobs on the short term, but the growth of how many more companies will be able to rise up because of that technology should be able to outweigh should be able to introduce enough jobs to outweigh the technology taking it away. But AI is a different beast, right? Because AI isn't just coming after one sector, AI is coming after it all. I think the shovel has been around for thousands of years. Yeah, the shovel's not a good example, but you know what I mean, like any form of technology. Yeah, Bitcoin looks like it wants to pop it. Get the rest of the topside liquidity here. So last second shorters are still sweating. Let's see if they're still there. Yeah, they're still there. Get the rest of the shorts and then maybe reverse it. We'll see. Bubble will explode only in 2 to 3 years, I believe. Yeah, I don't know. It's going to be interesting to see how 2026 summer. I think a lot of people are looking at the summer of 2026 as potentially when the bubble could pop. But you guys know how I do it. I just take it one step at a time and just read the volatility index structure. There it goes. A little bit of a flood coming in. Perpetual spread now. You see the spread just widened. There it goes. I said it at the beginning, this is a small flood. It's not a big one, guys. The bigger floods are a bit higher. It's like, whoops. The bigger floods are like here, here. And there's some right here too. And then obviously this one. So this is where the big floods would happen. You can see on the high time frame, we're not really in a big flood zone. It's just it's basically the people that just shorted in the last 5 hours getting squeezed out right now. Okay, Timo says they don't really care. So the first one, Coco. Yeah, Coco. We can look at the CFD for it. It's probably the same as the futures for it. Damn, this is a tricky one. Okay. Volume's pretty good on it. Bitcoin's still popping the top. Nice. Let's see. That's done. That's good. This is actually a pretty tricky chart. Yeah, it failed. It's good volume though. This is. I'm not too confident on my analysis in this one. I can try, but usually if I'm not confident, I don't like to give any opinion on it. It's good so far. If it comes back down, 5274 looks pretty good because this is already held. It was never tested. If this holds, then you want to look here next. So, yeah, I'm not too confident. The only play I could see is maybe this. But other than that, the short would be like here. So short opportunity at like 6465. Potential long opportunity at 25275. But again, I'm not confident on this analysis, but if I had to, this is how I would do it though. I don't really want to break below this, but it's not that big of a deal. You might have like weekly bull div here too. It's kind of close. No, you don't. Never mind. All right. Yeah, that's about it on it. How about on the monthly? Are a lot of contracts expiring soon, Crypt? Yeah, I don't really derive much from the monthly normally in terms of like where it's going to go directionally. I mean, the monthly's green so far, right? But it could easily flip red. Coco's a bubble. Yeah, I could see that. Definitely rotating out of... most places are... Like the West, particularly America, is trying to be more health-oriented, so... I'm not confident on it, sorry, man. But what I had here is probably, if I had to do it, this is how I would do it. I just wouldn't do it normally, because if I'm not confident on it, I'm not going to risk any money. Oh, Bitcoin's doing pretty good. All right, I'm going to call it here for today, guys. Let me get some GGs in the chat. If you learned something today, or if you just stuck around, appreciate it. All my lurkers and view bots, where you at? Let me get some GGs in the chat. Where are my view bots at? Where are my lurkers and view bots? There they are. Trax, are you gonna stream? Why the fuck is a hype train coming in right when I end the stream? View botted? Yeah, you can tell that I'm view botting by all the how slow the chat is. You see how slow the chat is? Alright, yeah. So the VOD will be recorded later today. Again, if you're new here and you missed stuff, instead of the VODs being recorded, posted on Twitch, they're going to be posted on the YouTube, because it archives for way longer than the Twitch. Like, my Twitch recordings from, like, anything longer than 90 days ago, so anything longer from 3 months ago, are completely lost in the void, except for some of the people who record the stream on their own. So, in order to archive them longer, they'll be on the YouTube. That way they won't disappear into the void. GG's, y'all. Be safe out there. Remember, use good risk management. Wait for the price to come to you. Risk management is very, very important, boys. Oh, and then also, it doesn't seem like there's that many new people here today, because I don't think I got any new followers today, but if you are new, that's the Discord if you want to get pinged when I go live. Risk management is so last cycle. I mean, if you think about it, dude, the people who weren't using risk management in the past couple months, the meme coin guys, have been absolutely slaughtered, dude. Just absolutely slaughtered. XJust, I haven't seen you in a while. Are you still riding that long? Do you still have that long open from down here? Or did you grab this one? Been paying a lot of funding, haven't you?